morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
It was good. So a lot of pretty pretty crazy market action. Although if you look at the trades, I mean most of them were just some levels. MSTR a lot. The couple big ones for me. Fastenal on earnings, just that American apple pie thesis, and then big tech buys did really well. Had Nvidia and Tesla early in the week, and then grabbed Google, Apple, Amazon, Microsoft, just kind of the whole basket, just on the big overreaction.
Nice, yeah. Kind of a tale of 2 weeks for me. It's close to the vest on, some stuff with good range. A lot of the miners were really good in that regard. TMC as well, and the MVST. This was like some shitty stuff just to trade while you're at the desk, and then a lot of the stuff I was DCA in or trying to get a piece of, start building positions in, took off Wednesday with that news. I really didn't catch the news, but I looked at the account and was like, why am I up 12, $1,300 here? Like, which one of these went off? Well, it was everything that I was in that kind of got a
Yeah,
lift. So
yeah,
just playing the range with a lucky day in there, just being, in and um, I think you still got time in a lot of things. Like we're just stuck
yeah,
in this range. So it's interesting that you mentioned Apple and stuff because a few weeks ago I said now's going to be the time to get into those bigger names and you're just not going to be able to plant your flag. Um, and so far so good in that process of getting a piece of the bigger names here in this discounted or pullback price.
yeah. I think we talk about the 3-2 market, the three up, two down, whatever. I mean, even within an individual day, obviously you can flip red to green, and just a lot of that going on. So you do have to just focus on what are the stocks that are in a zone I'm willing to buy and hold a long time. Like that's one thing I look at, and then the other one is just what's responding to levels, quick hitters, all of that. The days where it's down pre-market are much easier to trade for me than the ones that are up. I just kind of scale out what I'm in, or stay away on some of those, and just yeah. I mean, just the tariff stuff. I just think you're just going to keep seeing overreactions, and you have an administration, saying one thing one day, doing something the next. Um, Really, it does seem like they're most concerned about the bond market. I said that a couple months ago. That's very complicated to follow. Um, just I think if you just know that that's a big priority and understand that um, stocks can be a big casualty of that, and they can see big sell-offs and big overreactions. And I still just think you should see it as an opportunity rather than confirmation that you should short the market when it's down 20% in a couple months. I just don't. I don't think that's really where you want to be.
Yeah, you can kind of see. Well, I can kind of see it in the level too, and I caught it maybe more last week than this week. But the lack of enthusiastic sellers, it's just not really there. So whatever's making it pouting, they manipulation, whatever you want to call it. The pullback
Yeah,
doesn't seem like it's going to be sustained, or there's going to be a lot of follow through, or there's actual selling. I mean, if you went through the COVID market and you went through 22, 23, you start to see different kinds of selling, and buyers are still pretty resilient on most things, especially the bigger names. Buyers are really resilient. So um, the digesting of tariffs is um, it goes both ways. I mean, there's overreactions both ways to it, and
yeah,
um, I think I said last week, and it just got lucky on the timing, but it's like, things could completely change by Wednesday, and that's pretty much what happened this week. Well, the same things could happen this Wednesday too, so we're kind of in that uncertainty. And one thing I noticed early on, and it's pretty much undefeated, is the market does not like uncertainty, whether it's good or bad uncertainty. It still does. It likes to know the exact path, and it usually has
Yeah.
volatility when there is uncertainties, and that's just where we are currently with it.
Yeah, yeah, absolutely. I mean, and on the option trading side, the kind of the problem with that you can run into is that during peak uncertainty, the implied volatility is just is through the roof. So then you get some certainty, things calm down. Even as you're if you're correct on the direction, you can still lose money, and those contracts will bleed out because the IV just calms down. So it's more than ever, you have to be mindful of the kind of implied volatility you're buying into. And high IV isn't necessarily bad; it just needs to stay high. So that's one of the reasons why I trade MSTR so much. That implied volatility is high but stable. So as long as it's stable, you're okay. But if you're getting into um, some of the big tech names, I mean Apple, especially if Apple's IV is elevated, it tends not to stay up there. Um, so you can't. That's what, like when I said medium swings are dead, I mean for options, and that's what I'm talking about. Um, so you have to be really careful there. Um, if you don't have the chart time, not the time to be in options. You don't want to be in your 10 a.m. meeting with a bunch of options hanging out there that you can't get out of. News drops, and it can just really wreck some things. So good. Yeah, good time to be careful as far as options goes.
Yeah, the only time really I'm avoiding right now is that first opening 30 minutes. Um,
Yeah,
it's just a wash usually, letting direction play out, or catching a an auto RTL or a daily volume P level. Been way better after the open for some reason. So other than that, I'm not really avoiding much. But the profit taking, just taking trades at 10% and then moving that stop loss up right away. And um, I know we always run into the topic of talking about that people's account size. So I know
yeah,
it's a little harder for some people to play in this market, but when you figure out sizing and how to scale, it just really helps you in these kind of markets, because you're not planting a flag. And I mean, if you're planting flags right now and holding for 25%, you're probably getting killed. You're probably, even on share side, you have to
yeah,
turn it into three or four trade. I always say two, but it's really three or four trades, and then be willing to repeat the trade over and over again. And hanging out on the larger time frames kind of helps me on that. And that's been the secret for success the last few weeks. Even when we were in the first consolidation, um, it really helped. It's actually been easier the last 2 weeks because we have so much more range. Um,
yeah, yeah.
and
Now,
so,
if the other, I think there's a couple ways to look at it. If someone were to say like, well, I've got, I did well on some things. I got this 10 grand, and I want to invest it, and I'm not really gonna look at it every day, or so I'm just gonna spread it out. Apple, Microsoft, Google, Nvidia, whomever, um, and uh, and I'm just gonna kind of you know leave it alone. Not gonna buy it all at once, but the plan is to just leave it alone. I think you probably do okay with that. I mean, because Apple is Apple a $200 stock? Yes. I mean, in the 5 years from now, Apple's not trading at $90. Um, but if you're buying that stuff and you're glued to the minute chart and you're constantly tinkering, you're gonna tend to overreact, and you're gonna watch them go up 7%, and then it's gonna go, and then you're down 3%. You're like, shit, I should have sold, and then you trim some off at a loss. I mean, the more you tinker with those, the worse it's going to be in this kind of macro driven environment. Instead, I think for trades, whether it's the yen or bonds or tariffs or whatever the hell it is, oh look, Tesla's $220. Oh wow, look, all of a sudden the good news comes and it goes up. Stocks are, returning to levels that are getting defended, whether it's TA driven or option driven, or whatever. And so you identify a few of those, and you make those your trades. The ones that have pulled back but are in the middle of a zone or aren't quite in a level, but they're really strong companies and they'll be fine. I wouldn't necessarily trade those. It's just a little too chaotic. But I felt really good about Nvidia at 95 and Tesla at 220. The news brought them there, and I just figured they're going to bounce from there, just given what I saw, and they did, and then some, and those are the trades. So it's not the same kind of buys for the same kind of stocks, is I guess what I would say as far as that goes.
Yeah, those are great examples of hanging around on levels. What up,
Yeah,
Tesla 252? Don't search the group on that. I gave that a month ago. It's just auto RTL on the day, but you get
yeah, yeah,
consolidation around that. I don't trade Tesla that way, although I should. Um, but Nvidia definitely, and Nvidia, the news was so good over there that I flipped bullish on or trade. I don't want to call it bullish, but I guess it's what it is because I trade upside. But I flipped on Nvidia last week, and you seen how that worked out. It's just having that, not necessarily the basket, but having, if you're gonna follow it, if you're gonna watch list it, there has to be a spot where you're like, okay, this is where it's tradable, or this is where I will trade it at, and you just let that come to you, instead of trying
yeah.
to trade it the whole way down. And if anyone didn't have Nvidia on their radar, in the low to mid 90s, you don't follow us at all, I don't think, because I mean that was just the spot
Yeah.
in general we were waiting for. And the same goes with AMD. I mean, I talked people out of AMD for 3 or 4 months, and not only just I didn't just say no, I said no. Here's where we will trade AMD, and
Yeah.
you just got to have those plans. If you're a scatterbrain, write them down. Just write them down or make a note so when you see that stock, you also see the note, or just set an alert there, with a
Well, and the
notation on it, because that's the cycle. That's the not the secret sauce, but it's a big part of the damn sauce, is trading stuff when it's tradable instead of when you want to.
well the if you look up at like Nvidia 95, that was one that a level I saw in options a couple months ago, and so it's like, well, that's where I want to buy it. And at the time, it was 125 or $130 or whatever it was. You have to understand that if that's your plan, things aren't going to look great when it gets to that price. You know what I mean? It's like it's a lot of doom and gloom and bad news, and pre-market 4% drops and 6% down days and stuff. But then it reaches that level. I try not to then talk myself out of buying it. Well, it reached my price, but it looks like shit. But how would it have not?
Yeah.
If it's going to reach that price, it has to, something has to drive it there. And then, you scale in, you size in a way that's not going to stress you out, but you follow that plan that you had 2 months ago. And I talk about it all the time that, the work that I'm putting in and we're putting in, and checking back and forth on a given day. Yeah, sometimes that's to try to make money tomorrow, but a lot of times there's something bigger going on, and we're planning things out, and it's like, well, not yet, or yeah, you can get it here, but there's this level below. Usually that's me looking for you. So like if I'm like, hey, there's some bullish flow here, and you got a level 15% below, I'm like, all right, so I can probably day trade this, but I'll wait for a bigger spot down there. And so we're making the money for 3 months from now in the work we do today. And that's what happened with big tech. We were like, stay away, stay away, stay away. Okay, here we go. And if you're not ready, hey, okay, here we go. Then then I'm not going to say trading's not for you, but just watch it play out, and then try to build a plan based on what you've seen happen 100 times since you've been in this room. I guess.
Yeah, I don't want to say I'm a little different or go too much against the grain on you there, but if I'm dropping it if I'm taking the time to post it in collabs midweek and I don't wait for the
Yeah.
weekend session,
Right.
it's
Right.
because it's on a buyable level and I'm looking for that extra check to back it up. And this
Oh
week
well,
was
that's where we're
this
just.
week was a great
Yeah. Yeah.
week in collabs. If you go through collabs, there were so many actionable trades in collabs, but again, you have to be happy with that, that 10, 10, 12% versus, um, you know, I'm going to take this to the moon.
Yeah. I mean that's just a like if you look at prof notes versus unk notes, the times that you mention a stock, it's like kind of pretty much go time. I post a lot more setups, and they're like those are kind of the quick hitters. And then with flow, I I kind of like I sort of post the ingredients, like all of what's out here that I'm seeing, and then we sift through it, and we find it. If I use the term urgency, those are my collab posts that match, I guess, your typical collab post midweek, I would say.
Yeah, I just look for usually for what I notice, um, and again, it goes just to how I trade in my system. When I'm posting stuff, it's on my level. When you're posted, when most of the time when you post stuff, it needs a day or three before the level because they're getting ready. Like what was the last one where I was like, well, let's just wait for the 10. I think it was INOQ at $7 or $8,
Yeah,
and I was
yeah.
like, no, it's 778, and you're like, I'm fine with buying it at 850. I mean, that's usually when we get to those arguments, it's usually just a timing argument, not a move argument.
Well,
Whereas, go ahead,
yeah.
go ahead.
Oh yeah, yeah. So well, I'm the so flow pivots often bracket your levels.
Yes,
Tesla 280, Tesla 220. Where's
two
yours?
fifty five or two
250.
fifty two.
Exactly.
252.
Yeah, and that's a common setup for us. The the golden goose is where the level it's where it's like exactly the same. It's
Yeah,
like there
yeah.
are a few like that.
Well, that
So and those.
Tesla's a great example. So 252. I mean, I didn't pull it out my ass. It's a part of the auto RTL script. It's if you
Yeah.
look at the day chart, it kind of stands out as a pivot, as a spot that it broke before the big run to 500. So reconsolidating here's not a thing. But understanding that there's option activity at 220 and 280, I don't have that. So having that big money floor makes this tradable, and I'm assuming people are trading that. That's a great range. A 220 to 280 is it's a great trade on Tesla. Even if you're trading 10 shares and taking that $600,
Yeah.
it's a great
Exactly.
trade, and I think that's what I use from you more than anything. Um, is places to get back in or back out around levels, or
Yep.
like how much if I have a $5 stock and you're telling me there's $4 puts as opposed to $5 puts, I'm trading it a lot different because I need to have a dollar downside risk, and I don't want to be down, for a lack of better terms, $1,000 on 1,000 shares. I have to trade it a little different than if you're like, no, we have five puts here, they're going to hold this floor. So for me, it's just a roadmap on almost when to take profit or how much room to give in the sizing for the sizing and stop loss. So,
Yeah. Absolutely.
and right now, I think that if you're refining that right now, you're gonna it's gonna pay dividends going forward because we're in a market where like price is being revisited. So if you're just along for the ride, if you're just holding Tesla, if you bought it at 230 and you let it go to 280 because you want 300, and then you're back to 220, and then you let it go to 260 because you want 300, I think you're just missing three or four trades and learning how to that you can always re-enter. That taking profit, closing every trade green, tell me when you lose, all that stuff, gets ingrained in your head and makes you a little bit more profitable trailer. And um, not in horrible conditions, but in not easy conditions. I don't know how you classify the conditions currently, but they're not. It's not an easy
Yeah,
trade. Um, and as you started this conversation with, your best entry, and it's, again, I've said it for years, your best entry is going to be a red candle. So I mean, getting over
yeah,
that, buying on the pullback to a level, having a plan, all that I think really, um, it's not batting practice right now, but it's really good practice for a crappy market if we do get into one. Because I mean, I don't call this a crappy market; it's just volatile with the lack of sellers. I don't know how you see it, but um,
exactly.
that's
So
on the TA side and on the level two side. It's very easy to see the lack of people actually wanting to sell, and the algos, whoever you want to call them, are more in control of these moves, and I think that's why price is being revisited, is because they're still keeping it inside the box or inside of a range um, to create that volatility.
so one good example for me that it was sort of my intention with this last round of snow adds 120 125 area, um that it's like it had the big move, and it's like, well, I can envision maybe this is the one that I'll take it to 220 and 300, and you know hold this for 10 years. But I have these pivots for a reason, and there was a point at which on a pullback I'm just going to go ahead and clear out, and then I'll look to trade it again. And that happened a lot sooner than I would have anticipated, given what the market did. But I was already out, and I'm like, okay, I guess all right, back into SAS, and then it's Snow, it's Net, it's whomever, um, Pan W, D Dog, just whichever. Like so they all like responded to some pretty shitty conditions. A lot of these stocks aren't really don't have a lot of tariff relevance, but they're just going to come down with the market. They don't have warehouses full of shit, or anything like that. But you just look for them to respond at the level, and it's like, okay, I'll just trade it again. If I had kept those snow ads from the 120s, yeah, I'm still up on it. That psychologically doesn't feel good. I've learned that. Like that. I don't care if it's 3 shares or 2 shares. I had that with Elf. I had this like really amazing entry on Elf. I kept a couple of the original ones, and then it's like it's $55. It's like, well, shit. Yeah, I'm $20 up on it, but I wouldn't even have to think about this stock if I just had cleared out on the way down.
Yep.
So I didn't make that mistake with Spotify, with Duolingo, with Snow, with whomever. That this this market's gonna let you back in, and um, when everything was looking great in February and this was ripping, it didn't seem like that at the time. But you always have to have that idea that you don't erase these lines, and these pivots can come back, and here we are.
I think a lot of people don't have um, it's not necessarily a checklist, but just a like what trade, where are you putting the trade in the box, and if it's day tradable, um, it might not be a long term investment, but if it's swing tradable and a long term investment, you shouldn't just pick one of those. Like
Yeah,
you should trade them both that way, and have two different plans. And Snow's a good example of that. Like, yeah, price will be revisited. Should you start building a position? Sure, but you should also play the current range of the chart. That's close to 50%.
yeah,
It should just be, you should have that in mind. So not all, and then you come up with those like little sayings. Not that I have them or that I say them, but then that's where the stuff will. Not all swing trades are day trades, and not all day trades are long term trades. But all swing trades
yeah,
should be long term trades. Like you should. That's the point of swinging. But just come up with
right.
those kind of rules along the way, and I think you'll be way better off knowing that, instead of, again, I'm buying this stock and I'm holding on, or that's just the way I want to play it. It's such a good price here, and then never really, almost missing the read. Like, I'm sure Snow, you don't have 220s on, like you probably have
Yeah,
160s, 170s on. So trade that first, And then, if you
Right.
hold on to one or two and you stop loss at 150 and you rinse and repeat that, you're just better off, in my opinion. And it's all
Yeah, there.
it's figuring out who you are, really. And if you just want to be a long term investor, um, there's rules to that, to follow that, and one of them is constantly funding the account. So if
Yes.
you just have 10 grand and that's all you got and that's all you're gonna have, it's hard to be a long term investor, in my opinion. So swing trade. That was my promotion for swing trading.
Yes, absolutely. And shares are king with swing trading. It's just because I mean any mistake with options is magnified. So you could have 8 successful trades and 2 really bad trades, and you're about break even. Let me know when that happens with shares. That
Yeah.
doesn't tend to happen with shares. I mean, um, unless you're over allocated in something that goes bankrupt or whatever. But then again, that probably wasn't a good swing candidate
To
to
begin
begin
with,
with if
yeah.
that's on the table for that company. So,
I
um,
what else did I have on that? No, I'll wait. Go ahead.
all right. So, just wanted to get into
Yeah, do some boring stuff
some
here.
of our commodities futures here. Gold.
30
What can I say?
3,200.
I mean, yeah, yeah. 3,400 seems plausible at this point. Um, so so yeah, just the key, I guess, is just on a move like this, you identify what are the setups and some individual stocks that fit my style, and whether it's NEM or Barrick Gold or whichever EQX has shown up, something like that. So yeah, I mean, I just hope at this point I just kind of hope people got a piece of this move and uh, engage with what's happening. This can go much higher. I mean, it's the perfect macro conditions for people to stick around in gold, I think.
Yeah, I want to talk
And
Nima. I've been holding gold for a hot minute. Golden
yeah,
Budweiser. I've been holding through all this pain, but because it hasn't had any. Um,
yeah,
so um, it should be scaling out of gold a little bit more. But Neem last week, those buys. I mean, it's a good example of having a plan on a trade. And this could have took 3 weeks, but it only took 1 week. So I took profit on this Friday just because we completed the channel and the level, and I fully expect to get back into it along the
yeah,
way. But that's a good example of sticking to a plan for me. 45, 27, 54, 83 was our level. Um, I don't know if I'm trading gold right, P. EXK, gold, NIM, sand, stuff like that. Um, but it's working, so I'll take it. Even if I'm not the most efficient, it's working on my
yeah,
end. So the again, buying off level is still the best for me in gold and silver. I would put AGs that way too for
yeah.
me.
There's a big margin for error in gold. It's like hitting into a really wide fairway. Like
Yeah.
you can still hit your spots. It's not this isn't weed or something where you got to kind of really tightly manage it. So yeah, it's I think that probably continues. And then silver, this yeah, the dip in silver was a pretty big gift, I think, because our setup is still very much intact, and it moved down through the zone very quickly, bounced middle of the zone, can probably work its way higher from here. And I mean, what I would say, like from a flow perspective, when you're looking at like the 2026 January options and the complement to those being May through September, they haven't budged in those setups. They added some on the dip, but they didn't aggressively change their game plan there. So there's a lot of those silver miners that are still looking at 20 to 50% upside, I think. So just stay on those and rinse and repeat on a few of those, I think. and copper, uh, great level here. Again, another one that aggressively sold off. That is, I mean, a lot of the big picture conditions are still extremely bullish for copper and infrastructure. So a lot of noise going on, just a lot of opportunities in that sector, in my opinion.
Yeah, we're gonna
So
build
pick your
shit
favorites.
eventually. We're just a little on tape delay until we get around the tariffs. I mean, that's kind of seems
Yeah,
like the cycle we're going through is, figuring out the tariffs, figuring out the resources, and then jointly doing projects together. And when that comes in, I think that's when you'll see a lot of the, your X's and your CLFs really have a leg up. Um, but it's all going to come around the building to me. So until rubber hits the road, or until we actually have some projects, um, living in a zone, but still like this chart, still it's a 450, 475 zone. I remember when we just
yeah,
wanted $4 to confirm, and
right,
we've
right.
gotten that a few times. So um, yeah, market's just pouting a little bit, and until rubber hits the road, I think some of these are tradable. Um, but they're more off the level bounces than anything. Stocks are hard on the copper.
Yeah, I mean, I think so. Like for me, it's actually it's a pretty good time to be trading. Probably the most difficult of them, but just because it's under this $37 area, that I just keep add under 37, and what I'm waiting on is for it to break into that zone, that 37 to mid 40s area, because it moves quickly through there. So just want to scale in and try to get a piece, sell some at the test at 37, and then and then go from there. Timing's very difficult there, though. I think it's shares only for me at this point. You can so you all right. You can buy an in the money leap with as much time as you can get and achieve the same thing. But I've just kind of backed away with that. I mean, to be honest, as with some account growth, that gets less appealing because it's like the point of doing it was I don't want to allocate a lot of money to this setup that I know is really good. Um, well, you get to a point where I can just work with more shares, and it's a lot easier to move in and out of you know 50 shares than it is to move in and out of three leaps, basically.
Sure.
Um, and all right, so then oil, some struggles here. I got back into some oil in early in the week on just some pretty dramatic drops. But a lot of them are kind of out of my setups. And then I sold on the big pop. They dip back down. So going to take a lot of patience for oil. So you can add here and look to get back into our setups, weeks, months from now, or you can just wait for the charts to get a little healthier and then go from there. I think that's my read on oil for now. I'm not sure what you're seeing.
Yeah, no, you just need.
Bigger the better though. Look Exxon. Don't look the small ones.
Yeah, the drill baby drill just haven't panning out. And again, I hate to overuse it, but another thing the market's just pouting about. I mean, this is supposed to be the number one thing for Republicans is that oil
Yeah.
and dirty energy and stuff. And we got the coal news, but
Yeah. Yeah.
you haven't
Yep.
really seen that in oil yet. And we're just delayed. I really feel that's. I mean, we definitely seen it coming. But as you get closer to it, you get more clarity, and we're just gonna pout until we actually get something. And budget cuts and tariff fights aren't. There's nothing to trade off of that. Like it's not
Yeah.
bullish for any sector currently, and um, that coupled with they wanted to get prices down, they had to get oil down. Sure, there's some geopolitical stuff to that as well, and um, yeah, just it's a little delayed in my opinion. So if you thought the first 6 months of the year it was supposed to be good and tradable, it's probably into the first quarter of next year. Just because it's going to take them time to, lack of better terms, rubber hitting the road.
Yeah, I mean, oil. It had a good quarter, and I cashed in on that. I was buying Devon in December, and um, like scaled out, had a stop. It hit the stop, just obliterated the stop, and just kept dropping, and I'll just kind of look for it to set up again. What I don't see yet, and what I'm looking for is for the January 2026 buys that they had last year, for them to decide if they're going to kick the can down the road. That's going to give me some clarity. If they roll 2026 options at a loss out to the next year, whatever strike they pick and wherever that setup happens, I'll be able to read that. For now, it's more like I don't usually do the quick hitters in oil, but it's the big oversold bounces. It's like, okay, Oxy dropped 8% yesterday. Probably gonna show some life, pretty quick here, and so that's how I've been trading that. So it's a different game plan, but yeah, we need some clarity, and I just do think that the delay is a good term for it. I think that's what we're seeing there. Natural gas a little better. Natural gas is held together, so if you do want to get into energy, coal was it. We were on that, and then I do think the natural gas combos are a pretty good place to look still as well.
Yeah, they're a better spot to have a position in. Not necessarily waiting for news, but just waiting for them to have their turn. And I think not the elephant in the room, but what a lot of people overmiss is that natural gas is probably the number one for electricity currently in the world. It's not wind, it's not solar, and it's not oil. Like, we're not burning oil for electricity. So it has a niche market and something that just we have to have, and we probably need more of, not only currently but
it's a hell of a lot easier.
Forward.
So like in the developing world, to modernize homes and all of that, a hell of a lot easier to do that with natural gas than to upgrade some of those grids they have. That's a lot more delicate of a situation than to just pipe some gas in and get stoves hooked up.
Yes.
So I think that is definitely an important part of it. Natural gas has a clean energy angle that you'll see play out eventually. Again, that's a little bit delayed too to me. And then
well, it happened in the 90s. Like, part one of it happened in the 90s, where everyone got a gas stove and a gas furnace and stuff like that. I mean, but that was more about the the heating oil stuff than anything. Now it's just a lack of electricity. So it's a different time, but the same perk for that commodity. And it is pretty clean. It is pretty efficient. It is pretty easy to get to your house. So
I'm I'm kind of all in on the natural gas cars.
Yeah.
If I ever move out of Oklahoma, I might not be, but I'm loving that. I fill up my tank for $7. So
because it's so cheap.
Little Honda. Yeah. And just it's one of those things too. I mean, with Honda, I mean, Honda's kept the same kind of car for decades, so parts are cheap, and for a commuter car, it's just perfect for me. But anyway,
we're gonna have the natural gas electric car debate one of these days.
Oh, I know. Yeah, and it's a little funny that it's the the English professor stereotype with the natural gas car, right? Instead of the all-in electric hippie kind of thing.
I think the conundrum there is the English professor with the natural gas car that's very bullish on Dallas oil stocks.
Right? Yeah, there you go.
That's the what the hell to me, but I digress.
Sure. Um, so uranium, I want to call up this chart, and what you see here in this little zone is perfect. Exactly what you want. It's started to stabilize a bit. This is what you need. And I think that there's so something going on with uranium. I think the futures are going to see a pretty sustained move up, and it's going to happen from a moment like this. And so, I think I like a lot of those. I know some are kind of below our level, but we'll like those again soon, I think. So probably on my radar into the summer, I guess.
If we had an
So
actual,
I
if we had
like
an
what I'm
actual
seeing.
classroom, uranium would probably be one of the best for curriculum. Just because
Yeah,
you have like the blue chip and some shitty stocks and some really shitty stocks, and the the resilience of the blue chip is, I mean, it's still 456. UEC is still around that level, and the rest are bleeding out a little more. Um, but you kind of figure that out. So the ones you want to get back into is usually the blue chips first during these
yeah.
pullbacks. And I don't know if I did, but I almost brought that one up last week because it's ready on my end. But um, I always wait for these conversations to kind of have a signal in them and go from there. So
So I've been I've been wanting to get back into CCJ, and I don't. I mean, you can see my only pivot on that. It's way to hell down there, but um, looking for it to set back up, and we're getting pretty close. If it wants to build here, then
please do.
60 is back on the table easily,
Yeah.
and so I like, yeah, I like that a lot.
Yeah, I was
Um,
talking UEC 458 here
oh yeah, yeah. Though
for
there's
me.
comparable setups in those two. Um, so yeah, there you go. I mean, you can see it's kind of the same chart,
Yep.
just different price point. All right, so then wanted to mention this, and not to get into it from a TA perspective, but suppressing the 10-year was an administration priority that they lost some control of, and when it's doing what it's doing with these big candles, um, the dominant setup isn't necessarily bullish or bearish, but pop and fade is definitely what you'll see a lot of. When you talked about not trading the first 30 minutes, that's the time of in the market that can just eat you alive, because the premium, especially options premiums, are elevated, and you get a spike to the upside, and then it's just instantly gone, and then you need it to calm down, set back up, and you get the secondary move. So secondary moves are safer. Make a post-it note and put it on your screen right now with the 10-year doing that, because it's even more true in this setup um, than you otherwise see. So you want this to calm down before you think about swinging very much, in my opinion.
Or you can just change your Discord name to it so it really sticks. That works too. Um,
Yeah, exactly right.
um, I don't follow the 10-year a lot, but I do have the news on pretty much 24 hours a day. Just what I have in the
Yeah,
background when I'm trading. I just like, I don't know why, but the voices of CNBC are just my music for me. And they
yeah,
they had a lot of mentions last week about the 10-year. So definitely something that
yeah.
I don't know. I don't want to say worried about, but it's something that is making it to that level of the world where they're talking about it for a reason. I don't think there should be this much volatility in it as well. So I think there is some ongoing issues there, and where we go
Yeah.
from here, how that affects things, kind of not in my wheelhouse. I kind of follow you for that, but it's something that is definitely in play here currently.
And it's an algo keyword, so that's always something to be mindful of too. Intraday, that you'll see them mention it, those things that you're talking about, like some big report about it, and algos react to it. So they're programmed to um, have their ears open as far as that goes. So yeah, I would just say just be careful. I guess is what I'd say as far as that goes.
They're over there
And then
sending smoke signals through the TVs at each other, huh?
yeah, exactly. Yep, yep. And then Bitcoin. My comment on Bitcoin stocks Friday was that I wouldn't necessarily call them bullish, but there's some levels they're looking to defend, and I think I called it fortifying. I think that's what they're doing. So they're going to bounce well, especially on flushes below levels. But we still don't have a real direction here, and for me to where I think you would see an extremely bullish setup is actually if it were to flush to the low 70s or tap below 70 in the middle of the night in response to the Asian market or some shit like that, and then you get a big rebound. But for now, I mean, you don't really exactly need much to happen here, even just with some consolidation. Something like MSTR, responds really well on flushes underneath that 274 pivot. It's kind of been my best one. And then you just got to be careful on as it tries to claim these other levels.
Yeah, 10% trade, and that's where most of
Yeah,
Bitcoin is right now. And you get a little more at some of them, but I said a few weeks ago, I think we're gonna trade Mara again, but it's gonna be like 12 to 15. Well, you're kind of
yeah,
in that program, whether it's 11 to 14 or 13 to 16. You're there now, and they're not freshman trades. Like you really
mhm,
shouldn't be picking one now that anything you're trading in the Bitcoin sector, you should have already been traded, already traded the chart before, kind of know how it works, and
yeah.
then have some reasonable expectations, and they're fine. Um, Planting the flags and holding on, waiting for the move, but very very bad idea. Um, but I would also keep in the back of your head that the longer we're in this channel for, I mean, I'm praying Bitcoin stays 77 to 85 for another 2 months. And then, and then it has a
Yeah.
run or it has a few good days because that will give you way better moves in the charts. Just something we've seen
Uh,
several times. So,
well, and that consolidation washes out a lot of the leverage, and then that makes it easier for it to make a clean move.
yeah,
So that's
the
kind of what happens
mechanics
there.
behind it. Yeah.
Yeah,
It's
and then
just been too consistent.
yeah, and the one thing I mean, you can I bring these tweets up often like that. I said there's not going to be an altcoin season. It's kind of Bitcoin only, and then the shit coins are kind of noise. But I mean, you've seen that the Ethereum's just bleeding out, just
Golly.
brutal. And then you get stuff like Litecoin, same thing.
Was that
ADA,
is that Doge there? The same one that was 70 cents on the SNL news back in the day?
yes,
Yeah,
yeah,
if you're holding that, you're just an asshole.
yeah, yeah. I mean, even like the way that it lets you out, it retraced. What a coincidence! About half that move up, and then imagine if you just stuck with it this whole time. That even on that secondary pop that it did,
Yeah, yucky.
45 cents, and then we zoom out one more time, and yeah. So if you couldn't even get out, like let's say you managed to bag yourself at 25 cents or something, and now you let it go down to 16 again, even though it almost tapped 50 cents. Yeah, you're an asshole if you did that,
Yeah, I
for
mean,
sure.
if you're not seeing like 5 trades on that chart, you're just seeing the chart wrong.
Yeah,
You're playing the game wrong. Um,
right.
yeah, I mean, there's. I wanted to bring it up earlier when I forgot exactly what we were talking about, but we were talking about when you were talking about like Spotify and Duolingo, like you feel better now because you got out of there, and then the Devon you held on or whatever. Well, there's also things like Carvana. I mean, that
Yeah.
like I traded. Looking at the chart, it was a shitty trade for me. I mean, I got 8 to like 13 or 14 bucks. It's a $200 stock now. Um,
Right. Right.
but most charts aren't going to move that way, and wanting to find that one holy grail and hold on instead of multiply trading the charts is just you don't got enough capital for that. Let's just start there, and
Yeah.
and hopefully it'll come back to your level. And most stocks do. There's very few Carvanas that don't come back to our level. Like we're seeing lemonade about to be tradable again. Um,
Yeah.
so very rarely will you to transition back to this. Very rarely do you get a chart that just goes straight up and doesn't come back. This is more representation of how stocks really do move, especially ones that aren't blue chips. So, if you got this at 10 cents and didn't sell it at 50 and you held it down to 10 cents again and then you didn't sell it at 40 again, like you're just missing the whole plot on what you're supposed. You're a trader, you're not a collector. It's not
Yeah.
NFT. You're not holding on to it for dear life. So, um, I'm thankful that I know we had that little like 6 month of all the coins were in our rooms. I hated that point in time, but I'm glad now that we're onto these are shit coins and we can learn from them.
Yeah. Yeah. No. I did well on some of those, but it was you were buying into strength and selling into strength, and you have with stuff like that. That's the only way you can even mess with those. You can't. I like to me, fart coin goes down 80%. It's like, oh, this is the time to scale in. I don't really see that. And I'll say too on the with the capital idea, like I reject the idea that trade like a whale. Um,
Yeah, don't
we
do that.
you cannot. I cannot. Nobody in this room can do that. If you can trade like a whale, you are one because they have so much flexibility with the amount of money they're putting out there, and they can protect a position by selling millions of dollars in calls, and yeah, so there's some complexity to it. So instead, I read flow in a way that catches a piece of what they're trying to do, and that's all I'm trying to do, and that's the thing that's repeatable.
It's a David and Goliath situation, and you got to figure out what your advantage is over the whales and use it. And I mean, I don't.
Yeah,
Maybe we just have a session on that, but a whale is like trying to park a bus downtown. Like that's real hard to
yeah,
do. You're in a little commuter car. Like you got to get that
right,
parking spot first, and then you got to get out before the. But you ever pick your kid up at school? You want to beat the buses out of there. You want
yeah,
to beat the
exactly,
buses out of there because if not, you're
right,
stuck behind the buses. It's going to be a long wait. And I mean, that's your
yeah,
advantage. So, like, losing that perception for me is, or not knowing that perception for me has always been like, man, what are you doing? Like, you're just, they're a whale, they're a shark, they're gonna eat the seal. We're just gonna grab a piece and move on to the next one and build our account brick by brick. And
yeah,
yeah, I don't care who you are, you can't position like a whale because they'll go, they write the calls. They need more of them, they'll just write more of them.
yeah.
They need some shares, they can go borrow shares. You can't go borrow shares like they can. Um, yeah, a little rant there about the whales, but
Yeah, and then and that's last thing. Then we'll get on to spy for a minute. One thing I'm seeing is so you'll get these guys on Twitter that they tried to trade a bunch of zero DTEs Friday, and then they're like, well, this trade didn't work, but man, this QQQ chart looks great now, and I'm just, and then you get the tariff pause, and they took their $500 to zero, and now futures are probably going to gap up, and they'll be like, see, look what happened. And I just don't understand. Well, I know why it happens. Small account is the account. They're trading the $70 calls because that's what they have. But that's again just goes back to the starting over thing. And if you can see that, I think the market's going to see a recovery here. Position yourself in a way to just give yourself a little bit of time. I mean, you can't just zero DTE your way to success right now, in my opinion.
Yeah, I mean, I'm on stage or chapter 5 of my Twitter people. Like, you go through the stages of grief with them, but when you're trying to figure them out, they're just content creators. They got to do something every day to create
Yeah,
content for your engagement.
right, right.
Less is more. Like the people you're following should be pretty direct. I'm kind of, I don't know. The longer I hang out, P, the more I'm just like I don't feel bad for people that follow people anymore, right? Like like if you're
Yeah,
really following D Book Lane, whatever you want to call him, if you're really following Red Hot, right on, more power to you, man. I don't feel sorry for you anymore. I'm not trying to save you.
yeah,
If you fail for that shit, um, yeah, if you can't see through it, small account is the account. They're using you just for the engagement. That's probably how they fund their account, is through the engagement somehow.
yeah,
Because they're just looking for the next $100 bill to burn. They really believe in that. I can take 100 to 1,000. I can take 1,000 to 10,000. I can take 10,000 to 100,000. They really think that kind of stuff, and it's not how you get there in my in my experience.
yeah,
You don't take $10,000 or $1,000 and it magically turns to a big number. It's a grind up. It's having rules, um, and it's learning more about yourself and how you can not emotionally react to your trades and repeat a process. And that's
yeah.
just kind of what it's always been for me.
Yep, absolutely. All right, so I'll go to
Oh, hey, one thing, one
Spy.
thing before we go. So, and it's crypto.
Yeah.
I've been wanting to. Why aren't you, or what do you know, or thoughts on that crash out bullshit? What the hell is that? It's been around for a while. Thought it'd go away. Um, you know me, I'm out of the scene a little bit. But is that just another altcoin that just has a good name, or kind of
Yeah,
trendy?
yeah.
Or
It's a like crash out coin. Yeah. It's it it popped and faded, and like they're all bagged on it, and just sort of it's a Solana coin. It's just another one of those.
so it's just that
So they
it just has a more trendy name, so it's caught more people's attention.
exactly
Okay,
right.
okay,
Yeah,
okay.
because it's a way to sort of like talk about the conditions, like everything's turned into shit. So I'm all in crash out. I'm in my crash out era phase or whatever, and um yeah, it's a way to just talk about like I'm just gonna keep adding, and you know YOLO is just another version of that.
Shit. Well, if when that shit started, if you would have bought stocks, you would have had a really good 4.5, 5 months.
Oh yeah, yeah.
All right, Spicer.
Yes. All right. So so a lot of the flow I talked about, obviously kind of panned out, and to the downside, and I talked about puts were sort of dominating everything, and a lot of those contracts are uh, still out there, still kind of being repositioned. So the left side of the screen I ignore almost always on Spy. I don't read intraday flow or anything, but the relevant contracts right now to me are like September 535p, May 500p, and these are $1,000 contracts. The 535p's 3,000 whatever, and they're both mixed. So in a way, they kind of define a little bit of our range here. To say that is to say that 550 for Spy, as we get to 550, and as these contracts react to that, that's going to give me something to read. So I'm interested to see if the market wants to move on the tariff exemptions and all that. I'll be looking at what these contracts do and how they sort of um, how they react to that, because those are some of the big hedges, along with May 495. So um, there's nothing to the ups. There's no out of the money calls that give me any kind of clarity at all. Really, it's just those particular contracts. So I don't know in terms of your levels. What do we need to reclaim and hold to kind of set back up, or I don't know what your take is.
Hey, I'm glad you asked, Pete. Um, I talked last week about. I'm glad we got into candle structure when we did, um, as opposed to just reading the chart. But we had the big flush last week, and then our previous week, and then last week's session. I said, we'll probably live inside this range for a while from just this one candle. Pull it up. Just this candle here. This um, 505 low, 567 top. I mean, it's huge range. So it makes sense that we're living inside. I still think we do. I'm surprised we got that much back this week already. I mean, we almost retraced the whole thing after a flush open on Monday. So we got more range down and made up more range than perceived in the last session we had. Um, Same thing as most charts, though. You just trust your levels. And you trust what kind of guiding you along the way. So this 532 is the spot here for me, P. It's an auto RTL on the day chart, very similar to when Tesla Q hit same level, um,
Yeah,
which is kind of interesting to me. And it's not something that I put a lot of weight into, but it's something I take note of. So 532 is probably going to be the pivot this week. Looking for a tighter candle. If we confirm that, if we get Monday and Tuesday and that's the low, if you get a 530, 535 low Monday, Tuesday, I think you do see your 550 number. 560 would be our 559. That's the 1 year volume profile. 560 right there. That's going to be another thick level. So I don't think if we got to 620 by August again, let's just say we retest that high in August, that's where the market's going. It's going to be a grind up the whole way. Like it's just going to
yeah,
go up
yeah,
$15 at a time to get back through there with some checkbacks along the way. I don't think these big candles can continue that we've seen the last 2 weeks. So being stuck in that 530, 550 range for a week or two is kind of what I'm looking for going forward. Smaller candles, higher low overall, but lower high as well if you go to where the break started at that 560 or so.
yeah. That matches my read, because they're going to need to reposition these May puts, and so where they want to tag those is important. And given that the JPM collar blew up a bit, whatever they do will matter too. So I'll be kind of looking at that. And I will say, speaking of JPM, I kind of nailed that one. I'm glad that was the bank I picked. It reacted much better than Wells Fargo did. So just kind of followed the flow there. And
Yeah,
I think you'll sort of, yeah, go ahead.
the only one I think that was equally as good as JPM was Schwab. But yeah, you're 100% right
Yeah.
there.
Yep.
It was good.
Yeah, and you got more bank earnings this week, so interested in
What up, Key?
on that too.
A quick question before we head out here. On your left column there that you pointed out, that was the intraday column basically. Can you filter that to the week on that side? I'm just curious. That's just a curiosity question.
Yes. Yeah.
Okay.
I can. Yeah.
So you can change.
There's all kinds of.
You can change that from like a day or to a week or something like that if you needed to.
Oh yeah, absolutely. There's all kinds of tools to do that. I basically, instead of doing that with SPY, I'm doing that on Apple, Microsoft, and some of the proxies. Just gives me a cleaner read. But yeah, you can customize all that.
And there's no 430 action. You don't got anyone creeping in down there, do you?
No.
Okay.
No. There's so I mean, like these 425s are just going to drop off this week and are not relevant. But yeah.
So it was there, kind of, but
it was there.
Okay. Because I think that's the level you get if the sky's falling, and I don't think it is. I don't think we're seeing that, but that would be the signal to me, especially now that we're here, and
yeah, exactly,
$100 away, so perfect.
Yep.
Awesome. Anything else, or good to go?
No, we're good. Ready to
Awesome.
get to work on the other session.
Perfect. Like and subscribe, people. Link somewhere.